I'm Dan Fitzpatrick at StockMarketMentor.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money, right? Well, good trading takes more than just punching the buy button the next morning on the tickers you saw last night on TV. I'm here to help you make money on these three stocks I saw on TV. Okay, we're going to look at earnings here, Tesla, Whole Foods, and Fitbit. First, earnings, decent. Guidance, decent. Hey, everybody loves Tesla, right? I don't think so. Frankly, I think this is a selling or shorting opportunity. Even this is, though, a really volatile stock. I'm telling you, it is not for the faint of heart, and it's not for the non-committed either. The deal is we've got what could be a triple top if you look at this on a daily chart. You can see the stock's up after hours. I'm going to show you what it looks like right now. Okay, big move to the upside. Now this is fading here. Again, it's up. I think this is a stock that's moving right up into resistance. If the stock moves through this big area of resistance, and the reason I'm drawing a red line there is if you were buying it back here, wouldn't you kind of be anxious to get your money back after the stock fell this low and is now just moving higher? So I think this stock moves up a bit. That move may be done tomorrow, may take till the end of the week, might be the first of next week, but I'm telling you, if this thing even twitches, if it starts to roll over, I think this is a good shorting opportunity. Now, Whole Foods, interesting here, different chart. I think it's probably about the same thing here. You look at the weekly chart. This stock looks kind of scary. I like Whole Foods, though. Where I'm from, they call it whole paycheck for obvious reasons. But here's another thing where the short interest is pretty decent. You know, good enough to make this a little bit of a short covering rally. But I'm going to do this again. There's a whole lot of regret going on there. I think there's limited upside here. What I would suggest doing, because look, there's two sides to every trade. I could be wrong about wanting to short this stock, but here's your upside, or excuse me, here's your downside. If you are buying the stock on this gap, I draw a line here. This is a new low on this chart. So you're buying the stock right here. Dan, you don't know a darn thing. I'm buying this stock. You put your stop down there. If you're stopped out, fine. You know, that's a trade. You took your shot. You decided what your loss was going to be, and then you took it. On the other hand, if you are shorting this stock, what I want you to do is wait for evidence that this stock has petered out. Wait for a box that kind of looks like this or like this. What you want to see is a solid red box, which indicates that the stock gapped up and then ultimately closed lower on the day from where it gapped. It will gap up tomorrow, no question about it, but you want to wait and make sure that the stock has stalled. By the way, you don't have to short this stock. I'm just saying you don't want to be buying it up here. I would rather be selling it. Now, Fitbit, this company reported kind of blowout earnings if you call earning a 10 cents a share versus estimates of 3 cents a share. I mean, so they tripled their fun here. What's the problem? The problem is guidance, and nobody really cares except for a split second when earnings are first released. Nobody really cares so much about what the company earned as what they're going to earn going forward, and so their guidance was a little weak. But unlike Whole Paycheck and Tesla, this is a more interesting chart to me because the stock's gapping right down to the 50-day moving average where it's been up for a while. So we get this volatility squeeze here, a breakout on volume, and now I think you're getting a second bite of the apple. If the stock opens right around 15 bucks, this is another low risk trade, even lower than if you're buying Whole Foods. You just put your stop a little bit below the 50-day moving average, and that's your bogey right there. Okay, that's it for these three stocks I saw on TV. Hope to see you over at stockmarketmentor.com.